Welcome to the Capital News. I am your host, Alex Karitis. Today is December 12th, 2019. Thank you so much for joining me. Oh, a little bit of news happened today. You may have heard. It's really just Groundhog's Day. It's just like living in the Twilight Zone. And yes, I am going to have to talk about the U.S.-China trade deal, Phase 1. Maybe it does exist. Maybe it's like Bigfoot, the Loch Ness Monster. Maybe it doesn't. I don't know. We're going to find out. Apparently, though, what is being reported out there is that Donald Trump has somewhat caved to some of the demands of the Chinese because he wants a deal, because he does not want his precious stock market to take a hit. This is what we said yesterday was most likely going to happen. He puts the stock market pretty much above all else. And if he's going to do that, then there was never really going to be any type of successful deal, especially when it comes to the big ticket items like intellectual property theft, technology transfers, all of that type of jazz. When it comes to soybeans and pork bellies, it's really not that big of a deal. I mean, it is to the farmers, but a lot of them have gone bankrupt in this process. When you have a country in China of 1.4 billion people, they got to eat. So it's kind of a no-brainer that they're going to buy agricultural products in one form or another, especially when it comes to pork, because they're dealing with the African swine flu over there, which just has destroyed about 50% of their pork supply. So they have food inflation going on over there because of that, because pork is a big staple of the Chinese diet. So we're told that there is a Phase 1 deal in principle. Now you say, Alex, you said this couple months ago. You're absolutely right. I did, because I was reporting on what came out of the White House. The same exact headline. We have a Phase 1 deal in principle, and we know 2 months ago, almost to the day, there was not a Phase 1 deal. There was no signing ceremony. Even though it was supposed to take place in Chile, got canceled because of the protests. Okay, so what? So what? Air Force One can't fly somewhere else? President Xi can't fly somewhere else? It's because there was no deal. There was no deal. So I'm skeptical as to whether or not this is true. But of course it matters not. The markets rallied, and they rallied aggressively. On the back of this news, the Dow Jones Industrial Average closed the day up 0.9%. Same thing for the S&P 500. The NASDAQ 100 gained 0.8%. At the time of this podcast, the Japanese markets, the Nikkei, is up, get this, 634 points, 2.71%. A huge rally in the Japanese markets. Another up day, all in the green for the major indices across Europe, UK, Germany, France, Italy, and Spain, all up about 0.5%, all the way up to 1%. You have the Chinese markets trading up 1%, and the Indian market is up 0.5% at the time of this podcast. Now, is this going to continue? Or is this going to be buy the rumor, sell the fact? Because that leads me to another point I want to discuss here this evening. Coming across some of my Twitter feed news, and again, that site Zero Hedge, who I like to read, independent financial journalism, you can call it, is saying, well, there's been some officials from China coming out and saying, not too flattering of things about the United States in regards to our policies. And of course, I'm sure that means the recent bills that were passed when it came to Hong Kong and the human rights issues that are taking place in China right now. So, it's sort of an interesting question. If everything is so lovey-dovey and there's a trade deal, then why would the Chinese come out and make such a statement? Furthermore, it's being reported now, and of course, these are reports. We don't know what's true. We can't take the Chinese at their word. We can't take the president and his administration at their word either. I mean, who to trust? This is the whole problem here. But there are reports out there that this deal is not going to be signed. You hear that? So is this a deal? If the parties involved in the deal don't sign it, especially when the credibility of both parties is in extreme question, we can't trust the Chinese. They don't follow through on anything. And it's very difficult to trust Donald Trump and his administration, because we've been jerked around for 2 years on this with no clarity whatsoever. So there might be some sort of deal. It's not going to be signed. And where's it going to get us? Maybe. This is a big maybe, back to where we were 2 years ago, although only about 50% of the tariffs are supposed to be cut. Not 100%, just 50%. The Chinese have been saying we want them all cut. And in return, we'll buy more agricultural products. Again, they got 1.4 billion people. Now, they've been sourcing a lot of their supply from other countries. We've talked about this. Argentina, Brazil, Russia, others. They're going to find other supplies. That's how it works. It's not as if the United States has some sort of tropical climate that allows soybeans to grow and pork bellies to flourish. They can get them elsewhere, and they have been. And again, folks, this just takes us back not even entirely to where we were 2 years ago, but all of the shenanigans and chaos that has ensued during this entire process. Higher costs being passed on to the consumer, or margins being squeezed by producers, not being paid for by the Chinese into the treasury coffers here in the United States. No way, no how. It's not how it works. Farmers going bankrupt. All of that just to get back to where we were, and I don't even trust that. And neither should you. So why don't they want to show us this? Why is there not going to be a signing ceremony if these reports are true? Do they want to continue to just make things up so they can continue to juice these markets? Which needs to be investigated, by the way, because this is just out of hand. Because Donald Trump, very early this morning, right before the markets opened, not a coincidence, by the way, he tweets out that we want a deal. China wants a deal. And then, of course, later throughout the day, other things came through. And then, okay, now we're going to get a deal finally. And then all this other stuff starts to come out after the fact as well. But some other news that came out early this morning was U.S. jobless claims. They hit a 2-year high. Again, U.S. jobless claims hit a 2-year high. The reading was at 252,000 from a previous reading of 203,000. Again, this is a 2-year high on the U.S. jobless claims. Now, perhaps Donald Trump wanted to counteract this, because if this was the only major news that came out today, the markets would have sold off. And of course, we have a president who does not care about the stock market. That's sarcasm. Because he's fascinated and obsessed with it. So he wanted to counteract the jobs. Remember, he said in NATO he doesn't pay attention to the stock market. He watches jobs. Well, he was watching jobs, and the numbers that came out for jobless claims was not good. A 2-year high. At the end of the year. When you have all of the seasonal jobs for the holiday season. But we have a 2-year high taking place. That's not boding too well. That doesn't look too good to me, folks. Not good at all. Now, one economic print does not make a trend. And I'm not saying this is going to be the start of a trend, but it's something that is definitely worth watching, because we just stated here yesterday, as a reminder to this audience, that the Bureau of Labor Statistics has told us that they have overcalculated the number of jobs that have been created to the tune of 500,000. And this correction, unless it gets swept under the rug, this correction will take place most likely in February of next year. So we're going to see a huge spike in the unemployment figure, because 500,000 jobs is nothing to sneeze at. Because I can assure you, if there was a job print that said we gained 500,000 jobs, Donald Trump would be skipping through the White House lawns. But that's not what we're going to see. It's going to be in the opposite direction, because they have overstated the amount of jobs that have been created. And if this does turn into a trend with more jobs being lost, then it's going to be a double whammy. So we'll keep you posted on that. Some more market news here. What do we have here with commodities? Well, despite the fact that we have this these fabulous trade headlines and optimism of a Phase 1 trade deal, oil really didn't rally too strongly today. We still have crude oil, WTI, at $59.50 a barrel. Brent, the international metric, is at 64 3/4 of a barrel. Natural gas, at the time of this podcast, is actually down slightly. And you would think that the precious metals would have taken a licking, but they really didn't. I mean, yeah, they sold off slightly, but not what one would think off of this type of quote-unquote optimism where you're finally getting down to the nitty-gritty because, of course, 50% of the tariffs are off, and then the tariffs that are supposed to come into effect on Sunday are canceled as well. So you would think this would just be a rush out of safe haven assets and into risk assets. But we have gold trading at $1,468 an ounce, silver at $16.94. And then, of course, the fabulous soybeans, they're trading up 1.45%. So there you have it, folks. That's some of the market news. And the other thing I want to note quickly, too, on that, we have U.S. bonds at 10-year, because we talked about this yesterday. So just to follow up, yesterday it was yielding 1.8%. Now it's at 1.9%. Quite the increase in 1 day's time. U.S. 10-year Treasury note yielding 1.9%. We can't take 2%. If it gets back up to 2%, we're going to be in a lot of trouble, despite all of this optimism. I mean, what CEO in his or her right mind is now telling their board, their CFO, their COO, and any other high-level management, okay, boys and girls, let's get down to work. We got a phase 1 trade deal. We're going to start selling more soybeans and pork bellies in this country. Let's open up a whole bunch of factories and let's start hiring a whole bunch of people in industries that have nothing to do with agriculture. Even some that do. Nobody's going to trust the Chinese on this. We're going to have a hard time trusting the President of the United States. Again, this is why I wrote the letter to the President back in the spring of this year. All comes down to credibility. If you want to be the boy who cries wolf, there's going to come a time where that wolf comes and nobody's going to believe you. Could this be it? Because now, what is also being reported is that phase 2 of the deal is not going to take place until after the 2020 elections. Now, that's a big if. Again, this is what's being reported. Anything could happen. And really, you have an infinite amount of points between the number 1 and the number 2. So, yes, it might be phase 2 that doesn't start until after 2020, but what about phase 1.1 or 1.111 or 1.111111? I mean, they could make up as much crap as they want because they have. Well, we're going to have a phase 1.25, phase 1.5, phase 1 3/4. I mean, this sounds like a Three Stooges bit when they're playing football. I mean, this is ridiculous, but this is who you're dealing with. This is who we're dealing with. Not just here in the United States, but with the Chinese as well. So that's some of the market news. Got to pay attention to all of it because it's all interconnected. We have Japanese fourth quarter business morale falls to an over 6-year low. Markets don't care because they're rallying up almost 3%. Japanese industrial output has been revised lower. Japanese stock market doesn't care because there's supposedly a phase 1 trade deal, and it's up 3%. Can't make this stuff up, folks, but that's what's going on. We also have some more news in regards to the Federal Reserve. It is now expected that from today until the end of this year and maybe within the first week of 2020, the Federal Reserve is likely going to inject $500 billion into the markets. $500 billion. And a combination of things. There's standing repo market because there's nothing temporary about it. Overnight repo, quantitative easing, although we're not supposed to call it quantitative easing. $500 billion. That's basically, well, it's not even that. It's not even the full thing because we spend so much on defense. We spend, $700 billion a year on defense? Let's just, for the sake of argument, let's just say we're going to spend, or the Federal Reserve is going to inject the defense budget in 1 month's time. A little perspective. We're supposed to have a $1 trillion deficit next year, probably 1.2, maybe even a little higher. We talked about that yesterday as well. So within 1 month's time, actually 2 weeks' time, maybe 3, the Federal Reserve is going to pump half of that amount into the markets. Does that sound like free market capitalism to you folks? Better not. Sounds like central planning, and it sounds like somebody is in a panic. Sounds like something must be amiss, big league in these markets. Must be a huge problem somewhere Because why would you have to throw $500 billion at the problem in addition to everything else that they've thrown at the system? Doesn't make any sense whatsoever unless you follow the Capitol News and you understand what's going on here. That the Federal Reserve and other central banks are trapped, that they're out of ammunition. We've had previous podcasts on that. We have capital economics presentations on that. Check them out. They don't know what they're doing. And this whole system is predicated on trust and confidence, and we're supposed to place our trust and confidence in a bunch of criminals, crooks, and market manipulators. It's at the Federal Reserve, it's in the Congress, it's in the White House. So much for free market capitalism, so much for a republic, if we can keep it. That takes us to the impeachment vote. We had a continuation of arguments and debate and amendments being put forth by the House Judiciary Committee. This was a marathon. This basically was a 12-hour marathon of all of these shenanigans. It was just an attempt, I think, politically speaking, by the Republicans to showcase their support for President Trump, to muddy the waters with some of their rhetoric. Same thing for the Democrats. They muddy the waters, too, because they exaggerate some of the things. And this was an attempt, I do believe, by the Republicans to force the committee to have a midnight vote on impeachment, because the impeachment vote will take place first in the House Judiciary Committee, and if it is affirmed, then it will move to a full House vote, and that is supposed to take place next week. Well, I think this was a political ploy by the Republicans so that they could say, look, folks, despite the whole crooked process from the beginning, this witch hunt, this hoax going against Donald J. Trump, the Democrats had a vote in the middle of the night. They don't even want it done with transparency, I should say. They want it done when you're all sleeping. Well, Chairman Jerry Nadler wasn't having any of it. Of course, that's not what the Republicans came out and said, but that's what can logically be deduced as to what the politicians, the Republicans, were trying to have happen. It would just be another thing that they could go out there on all of the news programs, on all of their Twitter feeds, and say, look, the Democrats wanted to have a midnight vote because they don't want anybody to know what happened. Well, Jerry Nadler wasn't having any of it, and he said, meeting adjourned. We'll reconvene here tomorrow morning at 10 a.m. And, of course, the Republicans threw a hissy fit, and that's the end of that. That's all she wrote. So tomorrow morning, we will have an impeachment vote in the House Judiciary Committee. All probability, it will be passed, and then it will move to a full House vote, which is supposed to be scheduled for next week, and in all likelihood there as well, Donald J. Trump, the 45th President of the United States of America, will be impeached. And then this whole circus will move to the Senate, and we are already being told that Mitch McConnell, the Senate Majority Leader, is working very closely with the White House, which to me doesn't make much of any sense. I don't even know how that is allowed to happen, to be perfectly honest with you, because the Senate is the jury. So how is the jury coordinating with the person who's been indicted? I mean, that doesn't make any sense to me whatsoever. The jury is coordinating with the defendant. Okay, this is politics, I guess. That's how it's going to happen. So now you're going to have all the finger pointing on the other side from the Democrats, blaming the Republicans, that this is a kangaroo court, just like the Republicans have been saying about the Democrats. So here we go, folks. This is why this is a circus. I mean, I think the president should be in trouble. He should be held to account to some degree. Now, you can have an argument whether this rises to impeachment, and if he does get impeached, does it rise to removal? But he needs to, at least, in the very least, have his wrist slapped. But that's not going to happen. The Republicans can't even come out and say he did something wrong, which is wrong. I mean, what's the remedy here? Because Donald Trump digs in. He doubles down, he triples down. If he would have come out very early on and admitted that it was a mistake or that he shouldn't have done it and he won't do it again, yada, 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 I think that would have given him a lot of points with the American people. Well, at least he came out and said something. At least he admitted something for once. He didn't. It's the perfect phone call. He did absolutely nothing wrong. And now all of the Republicans are on board with the same thing. So now you almost force the hands of some sort of impeachment. And given what we know, I agree that he should be. Now, you take into consideration all of the stock market manipulation, and if you really were to do a real investigation into that, I think we'd have some more problems for the man. But that's his doing, not mine, not yours. That's his. It's his problem. The man who says he doesn't pay attention to the stock market. If you believe that, I got a couple bridges to sell you. So the impeachment circus is going to move to the Senate, most likely. And we have the jury, the leader of the jury, Senator Mitch McConnell, majority leader, discussing how to proceed with the White House, with the defendant. That's our system of justice, folks. Spectacular. UK elections. It is expected that it is going to be a big, big victory for the Conservative Party. So Prime Minister Boris Johnson will remain as the Prime Minister. It appears also that Jeremy Corbyn, the leader of the Labour Party, is going to step down as the leader of the Labour Party, which would make sense. He couldn't get a majority. He couldn't win. Now he's got to pass the baton to somebody else. Of course, they'll be just as rabid as he was with all of this Brexit talk. But the majority, if it holds, if it proves true, could be one of the largest majorities for the Conservatives since Prime Minister Margaret Thatcher, going back about 30 years. So this could be quite the big victory. The British pound rallied significantly today. Again, for those of you who may not be familiar with the currency markets, the British pound was up 2%. That is a huge, huge move in the currency markets. I mean, you're usually getting fractions of 1%. So anything like this is a big, big move. And if you take the time to go find a chart, a daily chart, I mean, you'll see what I'm talking about. Huge move, 2%. So we'll see if that stands the test of time, or if the markets will punish the pound back down to earth a little bit. Of course, a lot of this is going to be predicated on the real coalition that exists within the Conservative Party to actually get Brexit done once and for all. It's only been 3.5 years, going on 4, once we hit June of next year. So, God willing, the Institute of Democracy still has some type of solid foundation in the UK. We're hoping. We don't know. This is one election. At least the British people have stated, okay, the Conservatives need to have a large majority to get this thing finalized once and for all. Expectations are that that Brexit might actually take place within the first couple months of 2020. So they got to get to work immediately. So, but we've been told this before. I'm not holding my breath. I will give you updates as I find them important, because I thought the whole process was important earlier this year, only for the can to get kicked down the road until we find ourselves where we are today. So I'm not going to waste your time with a whole bunch of headlines that we got Brexit, there is no Brexit, we have it, we don't. I'll keep you posted. But that's the same thing with this trade deal, but the trade deal really moves markets. And when we do the intersection of geopolitics and global finance and economics, I have to at least talk about those things as well, even though it's driving, I would imagine, all of us crazy. I can at least speak for myself on that one. So there you have it, folks. We've given you the market performance for the day. The Federal Reserve is expected to put in $500 billion. Nothing to see here, folks. Pay no attention to the man behind the curtain. U.S. jobless claims hit a 2-year high. Do we really have a Phase 1 deal? Time will tell. UK elections and the impeachment vote tomorrow morning in the House Judiciary Committee. Just seems like a standard week. And tomorrow is Friday the 13th. Go figure. Thank you for joining me today, ladies and gentlemen. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.